Let me share with- Hello, people. How are you doing, guys? It's been a while I posted here. Um, but in today's video, guys, I'll be sharing with you something very powerful. This is the kind of stuff that your broker or your liquidity provider will never want you to have access to, and it is really, really powerful stuff. Now, there are two main things I'm going to be sharing here. Although this is not going to be a very long video, but it's going to definitely be one of the most wonderful videos you've ever watched, um, you know, on YouTube concerning trading. Okay, so there are two main things I'm going to be revealing here. Like I said, the first is how to trade the head and shoulders pattern correctly. Yes, the head and shoulders pattern is a very popular pattern, but you would find that, and that's really, really, really amazing for me. I found that lots of people trade it very wrongly. Uh, I mean, they trade it a very low probability way. And I'm not just talking about newbies, I'm talking about well seasoned traders who are even teaching their concept, you know. And I pointed this out once in one forum. I like to, participate in some forums, not mainly as, one of their most active. I just like to watch the activities of traders. And I was seeing this, well seasoned trader who was sharing his stuff, talking about his expertise. I think probably was trying to get people to come and take him as a mentor or something. But I saw how he was applying the head and shoulders pattern very wrongly. Okay, now the head and shoulders pattern, when used correctly, is one of the most powerful and most consistent chart patterns ever, and it is one of the most powerful reversal patterns. Okay, and so we'll be taking a look at that here. Now, the other thing that I'll be sharing with you guys is, other thing you'll be getting from this video is what actually goes on around the key levels. Okay, because what I found with a lot of traders is this: they can spot the trend very quite easily. Maybe you can put a trend line from here to here, or you can put a trend line from there to there, or you can use a moving average and all of that stuff, and then you'll be able to spot the trend of the market, whether you're doing it on a higher time frame or on lower time frame. But the problem is entry. You find out that when you take your entry, you've been crushed. Okay, and then oftentimes the not, the market will continue in the direction of your prediction. But hey, you're no longer in the market. You're out of it. All right. So we'll be taking a look at a couple of things around that. What goes on around the key levels and how you can better trade it profitably. All right. Um, that, like I was saying, that's a concept that most of I mean, the liquidity providers, the brokers, anyone who takes yourself a trade wouldn't want you to get. All right. So where do we begin from? Well, as we go on, we will talk about the head and shoulders pattern. So let me talk about the flow. We have this trade going on right here. You can see this is the business we have below here. One of them is about 2,000 and the other is 8,000. And quite a considerable amount of movement here we have. That's the key level based on the retail logic of support and resistance. And let me show you that right here. Yes, so right there you have it. So you have blow this more. So you have support. You can see price broke that level support and came back all the way back down there, support again. So when price broke it down like this, you would be expecting what? That level to act as resistance, right? Now price comes in right here. Check this out. You see what I'm pointing out, okay? This is what I'm pointing out right here, okay? Now price comes in. So price comes in here, okay? And then it gives you, they give you the bearish engulfing pattern. Now, if you understand, the bearish engulfing pattern is one of the candlestick patterns that traders look for. in reversal scenarios. Okay. And so they gave the bearish engulfing pattern, in other words, advertising to traders to come in and begin to sell this move, right? And they do it one more time here, the bearish engulfing pattern again. So lots of traders are going on, are coming in to trade this move right here. Now, this whole thing started from a higher time frame. I want you to take a look at this before we even go down to lower time frame to see how they manipulated the small traders. So we are mainly, this video is about how they manipulate key levels so that you will be better, you have a better understanding of what to do when approaching the key levels, right? So you can see right here, what do you see here? This is the type 2 Forex master pattern that I taught you guys right here on this channel for free, although what I gave out here was basic knowledge. You can see me taking my trades even around this level, but with the understanding of what was actually going on here. You know, it takes more than just the basic, although the basic will serve as a guide. It will help you. It can help you find your way through price. There's absolutely nothing I've dropped here that's not useful for the trader. That's actually my goal, guys. So, but we have market reacting from this low, okay, as market broke down there, according to my teaching, you saw that, and then price continued going all the way down. But then price coming back up here, what are they reaching for? Now, this is where experience, you know, where it takes experience actually. So the reason why I can take this trade is that I'm believing that price has done its job on top here, and then we are moving back down. Now, I could have taken a trade here, okay, or anywhere here as price was dropping down. I think I actually took some trade. Not everything I take that I record. But here we have another opportunity to take your entry. And what I'm actually looking for is them running this low. Okay, that's my first target. You see how I'm taking concrete trade. That doesn't mean that as price has traded to this level, as for real, I've taken out some profit already. But you know, it doesn't mean that until price comes to this low before I take out profit. No. Okay, I'm taking out profit on the lower time frame, the 4-hour chart, the 1-hour chart. You understand that? So because let me be honest with you guys, we have a system with which to predict the market, but we cannot really say this is exactly what the market is going to do. But when we have the market or price, you know, lined up in a certain way, we understand that this is a high probability setup, and I'm going to take it. And then you have your range of opportunity defined, where you're looking for price to expand towards. For me, in this case, I'm looking for it to expand towards the low. That's the first target. And after that, this low, we have a low here. And after that, this low right here. So that's what I'm looking for, basically. But then on this higher time frame, I just wanted to show you that we have this master pattern playing out. And everything that I did was first of all done here. All right. So we saw our master pattern playing out, and we can trust selling. We can trust this movement here because of everything that was playing out in this master pattern. Now, you can go back and watch those videos on master pattern. Even though I would say that was a basic way, was a basic form of it. If you want more of that, well, you know how to get it. But let me show you one more thing. Yeah, we're looking at this level here as the, check that again, as a resistance or support on resistance. So you can see, right, from this way, you know, back from this point, you have it here also as a key level, right? So it was a turning point there, like forming a resistance, support, support. And so traders are calling that a very strong level. So they're taking that trade, right? Just like I said before. Now let's go down to lower time frame. I think we should do the 15-minute charts, and let's do the 15-minute chart, and let me show you. So we're still looking at that key level, okay? That's a key level for the retail traders mainly, because I didn't take my trade based on that. So now look at that. This was the first touch of that level, okay? Now they came back up here and they played what? What's this pattern? a high, a higher high, a lower high. This is your head and shoulders pattern, right? And right away, you would have people taking trade. Now, where would people be taking trade? Right here. When this lower shoulder was being formed, I mean, after it was formed actually, and you have, maybe you have this strong movement of price, this momentum, this candle that formed, you know, it's a strong candle. So people will be taking that trade there and putting the stop above here and above here, right? So for safer stops, they'll be looking to place it above the resistance line, above this recent above this high. All right, and then they are waiting for price to go down, trade all the way down, right? Because there you have a reversal pattern playing out at the key level. But watch what happens next. Boom. They took out the stop losses and dropped down. This was where I began to take my trade because my key level was not here. My key level was actually somewhere around there. And I don't actually need to take the trade around there as well. I can wait for that level to be confirmed, which it did here, breaking out this low. And then we had the reversal back into 61.8 retracement level. And I'm going to be showing you this is exactly how I take my own head and shoulders. But there's one more thing that I want to give you out. Okay, you see, before you expect any reasonable movement of price to the downside or to the upside, you know, any remarkable movement of price, you want to make sure that the liquidity provider is already satisfied. All right. So what I mean by satisfied is that for them to sell the market, for them to drop price, they want to make sure they've already trapped lots of buy side traders. Okay. Now let me bring on the daily dividers to explain what I just said here. Okay. So yeah, this is the daily divider, and let's crunch this up a little bit. Okay. So there's the daily divider. So you have the head and shoulders pattern I was showing you here, and then see how the move past that. Now you can see that was the high of the day. So rising above that is going to be liquidity. Now think with me for some time. This is exactly what plays out around key levels. I can bring up many key levels here, and you will find it out over and over and over again, guys. You want to pay close attention. This is very powerful. Okay. Now you have the head and shoulders pattern playing out right there, reversal pattern, right? So people are taking the trade, selling this market already at this point. You see what I'm pointing at, right? At this point, they're selling the market, placing the stop loss above those highs and above this high right here. Okay, and then they are taking they'll be looking to take profit as price trades down, right? But then the market broke out, taking out their stop losses. What is their stop losses? Now, as traders, you should understand that your stop loss when you are taking a sell side trade is buy side liquidity. You understand? It's a buy side liquidity. So they broke above that level, took out the buy side liquidity. Now, they've taken out the stop losses, right? The next thing is you have breakout traders. People will believe that once this key level is broken, then you are having a breakout to the upside. So this level, you have buy side pressure coming in, and so the sellers could not hold on here. So people are going to be taking the buy side trade as well. So you have the sellers first who came in. Those are the early sellers putting their stop loss above. The market breaks out, take out the stop losses. Now this breakout as well is calling in the breakout traders who are believing that resistance broken means that price is going higher, right? And so that was buy side liquidity grabbed. Okay, so before you want to see any significant move such as this is quite some significant move, right? So before you see any significant move, like something like this, you want to see something like the one I just showed you right here happen. So this is exactly what goes on around key levels. Liquidity, okay? Before they sell, they want to take off that liquidity, that buy side liquidity. Why? Because that's the only way they profit. As they're dragging this price down, they are actually making money and they are closing off positions in reasonable points. You have this point here. So these are areas where I did take out profits, take out profits in different levels. Like I've told you, I've taken out some, good amount of profits. But I'm looking ultimately for that point here, and then we can expect to see even a continuation downwards. Okay, but that's exactly what goes on, guys. That's a secret that I don't want you to have, because if you have it, it's something else. Now I'm going to show you how to trade the head and shoulders pattern profitably. Now you have a real good profitable setup right here, but there were a couple of things that were not taken into consideration. Because you have a head and shoulders pattern doesn't always mean that you should take it. Like I was sharing with you, this is a high of a day, and I've told you guys that the previous day's high is a good liquidity pull point. All right, so you have that retracement back into the high, and then they take out these on a separate day. Okay, they form this high, and on that high, that high also formed the high of the head and shoulders pattern, right? And so it was quite significant. So it's a significant liquidity pull, both there, both there. Now, sorry for that. For let me go to the higher time frame, and anybody who took my course should be able to see the real key level. Okay, I'm just gonna blow that up a little bit. This is where the retail traders were looking for, but my guys knows that this is not the real key level. The key level is around that range. All right, so good. So you can know that this was a fake move already by understanding what a real key level is, not your support and resistance. Mainly, price is not going to always act from that. So your main key level was around here. I'm going to drop the line right there now, so that you see that around this level here. Now, because this is hindsight, thank God I took the trade, so that you're not saying this is just hindsight stuff, because I know what I'm talking about. That's why I took the trade here. Okay, you can see them. This was where they made the false move, because retail traders were looking at the support and resistance concept. All right, but that was actually the key level. Okay, so we understand that everything that was going on there was actually the liquidity play. They were actually creating the buy side liquidity that they will need to sell the market, to dump the market. So we have this, it wasn't little at all, because you can see the amount of money being made there. That's huge, guys. It's no joke. And I'm telling you, I've closed a lot of profits, and it is really, really great. You see, setups like this don't always occur. Okay. Yes, I take a lot of trades like that, both in the currencies market, but it's not everything that I'm going to be sharing with. I'm not that kind of guy that, like to flaunt things around, like, I do this, I do this, I do that stuff. No, that's for babes. But that was the level, the RQ level, not this one, not here, this low right here, because that was what the retail traders were looking at. So it was easy for the liquidity providers to actually use that level to create the liquidity that they need. Do you understand? So that level, according to what retail traders were have been taught, support turn resistance, resistance turn support, that concept, it was now easy for the liquidity providers to actually create that liquidity. Okay, now they supported that with your head and shoulders pattern. So imagine, for instance, you already know that right, that was the key level. So when they form this fake key level right here, you understand, right, that was actually them playing their nonsense. When they formed that, when price came to that key level actually, and they formed this head and shoulders pattern, a reversal pattern, okay, you know that was just bullshit, and you waited for that. Now let me show you exactly how I trade my own head and shoulders pattern, and it is quite profitable. You can go to your chart and backtest it, but I've shown you guys that there are quite a number of things that goes into trading the head and shoulders pattern. The head and shoulders pattern should not be expected to print anywhere, because if you were taking the head and shoulders pattern, then you could have taken this and you could have fallen into the trap of the liquidity providers on your broker. um okay, this case is the broker. Okay, that's what I'm saying, the broker. So this is the head and shoulders pattern. And, okay, so here you go. Your head, your shoulder. Okay, then the head, then the other shoulder, right? So that's your head and shoulders pattern. Now, when this forms, traders will be taking their entry. Some traders, they trade the breakouts. So that's how most traders trade, because at this point they don't know if it's going to be head and shoulders. So most traders trade the breakout actually. So let me go back to that chart, to this chart. Okay, so you can see here, right here. All right, so right here you can see that when this broke out, this after this left shoulder has formed, this is where most traders were actually buying, selling. This low right here, you can see that instantly they took the price away from their hands. They took the market back up. So instantly, those guys went into a serious loss. Okay, so they were trading that breakout. All right, so people will be trading the breakout, and we're expecting that this range, something like this also, they will take a measurement from this high to this point, and then they will place it down there, expecting that that is the next thing that's going to form. Okay, so that's how most people trade the breakout. That's how most people trade it, the head and shoulders pattern, and they will ignore lots of the things that is happening in the market. So like what we have here, most traders will have fallen into this, ignoring lots of the things that are happening in the market. Well, again, you have that resistance points that we saw, support and resistance, and then yeah, a lot of people will be looking at that. Yes, but I can tell you guys that's not exactly what causes the market to move. Okay, you want to understand. So, but now let me show you. That is how they trade. But this is how I trade my own head and shoulders. Okay, and I'm giving you this because this is very powerful. So once you understand what a true key level is, what the market makers are actually looking for, then you will understand where to come in with your head and shoulders. Okay, the head and shoulders is actually printing everywhere. I can tell you that for free. So this is how I trade the head and shoulders. You have a high, which forms your left shoulder, right? Okay, and you have this higher high, which forms the head, dipping right into your key level. And then I like to see this happen. Okay, so this is a key level. You rationalize as a key level. So I want to see this break of structure here. So here you have a break in the market structure. So number one, we have it at the key level, following the higher time frame analysis. So this can actually be even on the higher time frame, and so you need to understand what the key level is on a higher time frame. So, but that's a key level, and then you have the head and shoulders pattern playing out like this. So I want to see this break of market structure. Then this retracement has to be a retracement that now you have to bring in your Fibonacci tool. So let me bring in the Fibonacci tool right here. Okay. So let's insert. We're bringing it. I'm sorry. We're bringing it Fibonacci retracement tool. So from that high. Oh, sorry. I don't know why this thing is not clicking through, but anyways, let's not waste time with this stuff. Okay. So, but from the high, from this very high right here to this low, we're going to place our Fibonacci tool from here to this point, okay, where the retracement actually starts from. And we want to see price retrace back into 61.8 retracement level at most. So it's going to be around that level, okay, 61.8, okay, and then you are comfortable with taking that trade. Now, with my traders, people who I teach, they can actually use that retracement in alignment with maybe a key a reaction point around inside this price range. So you could have a reaction point around that price range. So when that aligns with that, it becomes even much more powerful. So 61.8 retracement level, and then we can expect to see that movement of price back to the downside. It's exactly what I do. Now, this can play out in different ways. There are times when this high, this doesn't play out exactly like this. It could be something like this, and that's what I'm going to be showing. That's exactly how I took this one here. So all of that is based on experience. So you don't expect the market to be 100% perfect. So we have this. Okay, you can have this happen. So you have this. For me, I'm still looking at this low. Okay, and then you can have something like that. You can have this happen. Now this low is broken, right? Now, how do I take my 61.8 retracement level? It is no longer from this high, especially if everything here has been balanced up. Now that's something beyond the scope of this video. But if this range right here has been balanced up, I'm not going to be pulling my Fibonacci. Now, so that's why I said it takes experience. I'm not going to be pulling my Fibonacci from this high. Rather, I'm going to be pulling it from this high to the low, okay? And then I'm expecting the 61.8 retracement level from this point. Okay, and so that's where my entry is going to come in on. All right. So I'll show you exactly how I did that right here. So you can have it. This is it here. Okay. So this was an overall head and shoulders pattern that was actually playing out on this chart. We have a bigger head and shoulders pattern. We have this shoulder. Okay. That was the area. That was the head for the retail traders who got wiped. But for me, it's the shoulder. Then we have the head, and then we have this lower low right here. Now this is exactly the drawing I was giving out on the second scenario. So we have the shoulder. So we have your shoulder. Then we have the head. Okay. Now where is the next shoulder? I wait for this low to be broken before I look for the next shoulder. And so this is the next shoulder. And so when I pull up my fib, now it is not from this high. It is not actually from, it's no longer from that high to this low. It is not from this high to this low, because we've had price, do this balance stop right here. We have some really good, nice movement right there, and price moved all the way back down, breaking through this low. Now, when you put your fib here, you can do that, in your chart. That's around the 61.8 retracement level. Now, that is aligning with a couple of things inside here, which is also beyond the scope of this video anyways. But if you took my training course, you could look into that, and that will be a very powerful stuff for you. Okay, so but it aligns with something right here, but it is actually 61.8 retracement level. Okay, so that's exactly how I trade it. I've given you those are the two points, the two ways that it can actually play out the head and shoulder. So you can have it the shoulder, the head, and then the breakdown straight away. Or you can have this happening here, balancing up whatever is up here, and then the breakdown. So you as a trader, you may be waiting for it to come back above around this level, which is some people will call this non-resistance, but they know that if it comes back there, you're going to be participating in that. But they've already done the job right here. Okay, all right. So this is a very deep video. It's very powerful stuff I shared here. It is something that you may want to go back and look into very closely. Okay, now we have the trade running. It's been doing really, really great. And yeah, that's what it is, guys. I'm still looking for that low to be run. So I'm targeting that low actually. That's this low right here. We may come up with a separate video later on, okay, if that is achieved. But I'm taking profit. I'm still going to be taking some profit off. You can see if you were watching this, you will see that the price was actually going up and down. 80,000, 8,000, 2,000, or dropping below that. Anyways, but it's all good, right? That's exactly what you need to understand. Okay, so it is not support resistance mainly, guys. So when you draw your support and resistance levels, you want to understand that this was the support and resistance level, people were seeing, but the market makers were actually looking for how to take, money off their hands. We can take money out of the small traders' hands. Okay, that's how they get paid. You don't think these guys are running charity business here. Okay, when you sell, and it definitely means that they're buying. So each time you sell, the liquidity provider or the market maker is buying from you. Okay, so when you sell and price continues to go down, it definitely means the liquidity provider is losing money. So, but when you sell and price reverses back on you and goes up, it means the liquidity provider is profiting. Okay, so because everyone in here is trading. Okay, you don't just understand how the trading goes on. When you buy, the liquidity provider is actually selling to you. When you sell, the liquidity provider or the market maker is actually buying from you. Okay, so in a way, you can call them traders. Okay, just as you are a trader is one who buys and sells. These market makers are actually traders as well. You understand that? So if you are trading, let's say for instance you buy, the only way you can record profit is if price continues to go higher. And if you're selling, the only way you profit is if price continues to go lower so that you can buy at a lower price. That's the same thing that goes on for the liquidity providers. So that's exactly why you see stocks like this playing out around your key levels. All right. So that does it, guys. I'll see you some other time, guys. Cheers and God bless you all.